In the continuation of the above video, we are going to see the second report in kinds of report, that is modified audit report. What is modified audit report? It is nothing but when auditor report is considered to be modified when it includes a matter that does not affect the auditor opinion, which emphasize on the matter, which is nothing but the auditor might have some opinion to the organization in their financial statement, but the management or the people over there, they have given some other things to be slightly changed in the auditing report, but it does not affect the overall report or the company's growth. So where the auditor can change his opinion slightly towards the favor of organization. The second one is that the matter that do not affect the auditor's report, which do affect where it is affect, that is qualified opinion or advised opinion or the disclaimer of opinion. These are the three places where the auditor reports or the opinion has been affected when the management or some other organization has involved in the reporting of an auditor. They emphasize the matter comes into an account where the auditor includes an emphasis of matter paragraph when auditor consider it is necessary to draw some attention towards the users of financial statement to the matter which is already, please consider, it is already disclosed or reported in the financial statement. And understanding the specific matter is important in understanding of financial statement. This comes on emphasizing of matter which on opinion of auditor. Next, what is qualified opinion? In opinion itself, we will say there are some qualified opinion and there are some unqualified opinion. Qualified opinion where the audit express the sufficient appropriate evidence, that is audit evidence, which concludes the misstatements or individual which are materialized or aggregate or not perceives the financial statement, or when the auditor is unable to obtain sufficient appropriate audit evidence, where that is the auditor is not able to get the sufficient evidence to show that these are the places has the financial statement has some wrong things has been done. The auditor concludes that the possible effects of the financial statement of undetected misstatements, if any, could be a material or not a perceived. This comes under the qualified opinion. There is a disclaimer for this opinion also. Definitely, if there is an opinion agree, there are some persons, they disclaim their opinion. Where the disclaimer comes? The disclaimer of an auditor comes when it is unable to obtain sufficient appropriate audit evidence. As I said earlier, when the auditor does not able to gather the evidence, sufficient evidence for the misappropriate or misleading of some financial statement. On that basis of opinion, the auditor concludes that the possible effects on the financial statement of undetected misstatements, if there could be both in a material or, as I said, as a perceived. These are the two places the auditor can give the disclaimer. They can say that I can't do, there is no evidence or there are no such evidence to show the things which are going wrong in that particular places. This is called disclaimer of opinion. Next comes the adverse opinion. Adverse opinion is nothing but the auditor has sufficient appropriate audit evidence. That is, he gathers so much of evidence to show the thing that is wrong, the statement that where the transaction has been wrongly entry. He has so much of evidence, sufficient evidence what he wants. more evidence like that. It can be, as I said, it can be both material or